Bitcoin has been on a wild ride over the last 9 months, trading over $67,000 in November and then down to under $19,000 in June. We're back up to about that $23,000 mark, but where do we go from here? And can we get back to $50,000 in value? Let's take a look. Bitcoin is often called a store of value, and this is something I really want to dig into with this cryptocurrency because I think there are some challenges ahead. One is that Ethereum's merge will actually make that blockchain far more efficient. So right now, Bitcoin and Ethereum, which are the two biggest cryptocurrencies by market cap, are both what are called proof of work cryptocurrencies. This means that validators go through a computational process to validate transactions on the blockchain. But Ethereum is soon moving to proof of stake, which is expected to cut energy usage over 99% on that blockchain. Now, from a security standpoint, Ethereum is about as secure as Bitcoin is. It'll be interesting to see if investors still value Bitcoin in the same way when Ethereum is a much more energy efficient blockchain. Another thing to think about is the utility is actually moving to other blockchains like Ethereum and Solana. This is where you can find NFTs, decentralized financial protocols, and there's all kinds of businesses being built on top of the blockchain. The same just simply can't be said for Bitcoin. The idea of Bitcoin as a store of value may also have a limited number of buyers just like gold. Now let's dig into a couple of these. I want to take a quick second to thank this video's sponsor, The Motley Fool. Check out the link in the description to receive their 10 best stock picks to buy now, or go to fool.com/Rive. That's right here. You can check that out, fool.com/Rive. It helps the show. Let's start with the store of value. So if we use gold as an example, gold's market cap, or the value of all gold in the world, is about $11.7 trillion. Compare that to Bitcoin's market cap of $450 billion, and you may see a lot of upside there. But let's look at gold compared to productive assets like real estate, stocks, and bonds. The real estate market is $327 trillion. The stock market around the world is worth $108 trillion, and the bond market is worth $128 trillion. Combine those three asset classes, and gold is about 1/50th of their value. If Bitcoin is the gold of the crypto world, how much is a cryptocurrency like Ethereum or Solana or Cardano going to be worth? I would think it would be worth more than Bitcoin long term. Now let's look at the developer side of things. According to A16Z, which is one of the biggest investors in the crypto space, Bitcoin only has about 500 developers. That compares to 4,000 developers on Ethereum and 1,000 on Solana. I will say Bitcoin is the oldest blockchain, so it's the most established, and you would think would have the most developers. Solana actually has more, and it's only about 2 years old. So if you think we're going to be using Bitcoin for things like buying hamburgers, this is a really troubling development because that kind of development is going on a cheaper blockchain like Solana. Now here's the big question for an asset class like gold or Bitcoin is who is the next buyer? Bitcoin needs more adoption to increase in value, so the question now is who is buying? We've seen the crypto market crater over the last few months because there are simply investors who are leaving the space. So where does that leave Bitcoin? Well, you could wait until the next round of investments that come into the cryptocurrency space, but are those investors going to choose Bitcoin over Ethereum, Solana, or another utility cryptocurrency and blockchain? I just simply don't see that being the case. So is Bitcoin going to hit $50,000 again? It might, but long term, I think the opportunity is in these cryptocurrencies where there's more utility being developed, more businesses being built. Bitcoin is not where that's happening today. It's happening on Ethereum and Solana. That's where the largest amount of investment is going today. That's where I'm putting my money, and I think investors should do the same.